Thank you, Mr. Chairman. Good morning, Director Chopra. In questions for the record following an April of 2022 Senate bank hearing, Senator Menendez asked you whether Regulation E of the Electronic Fund Transfer Act required refunds for consumers who are scammed, as opposed to victims of fraud. Your response, I viewed as rather vague, and I want to clarify it, because it suggested that certain Regulation E provisions apply to peer-to-peer services, but not directly addressing the question. So to clarify it, does the CFPB believe that consumer-authorized but fraudulently induced transfers are considered unauthorized electronic fund transfers under the EFTA? You want to? Yeah.
It's a pretty technical question. We're also happy to take that question again for the record. But the general sense is that with respect to fraud and scams, the line is a little bit blurry. And it is true that there has been an increase in what has been called push payment fraud. And so one of the places, there is the Regulation E framework, but there's also the network rules that govern, for example, ACH, other things. Typically, those network rules have set some of the parameters for the responsible party with it. So I think this has been a place where the nature of electronic funds fraud has evolved, but it's hard for me to give you, and I'd like to give you a more black and white answer.
And I'm going to ask for it for the record, but I just want to make under Regulation E, it sounds like, and you can clarify this right now, it doesn't sound like it's Regulation E that you would look at this, perhaps under other areas, specifically with regard to ACH activity.
Well, there are some places where Regulation E would certainly apply.
Give me an example.
It is something that I don't want to misstate, but I'm happy to really answer that for you and meet with you.
Yeah, because look, this is a pretty big deal.
I agree.
Because it's one thing, the way that it was originally intended was that if it is the fault of the organization, the system set up, where somebody actually gets in and is defrauded out of a loss. That's different than if somebody makes a decision and then uses the system to transfer, even though the fraudster on the other side of it is responsible and the individual has decided that they want to transfer it. I don't see how an organization, in the middle of this.
So here's the issue. I think sometimes the way in which the money moves, just like when a financial institution's information might be taken, a consumer's credential information may be taken from the financial institution. So there are places where you are able to simulate an outbound transfer that may actually be fraudulent.
And I am going to ask you to put that to the record. Yep. This is a really important point.
No, I appreciate this so much. Fraud is real. Electronic frauds are getting more complicated with use of generative AI. So we do have to think about what do we want to make sure we're offering guidance so that it is clear how we deal with these things. But I completely appreciate the sensitivity.
Okay, and I'm going to ask you a little bit about AI in a minute, but I want to get to one more item first. I have to admit that I was very disappointed yesterday to see the CFPB's proposed rule to eliminate medical debt from credit reports. Just 6 months ago, when you were last before the committee, I expressed my concerns with simply excluding medical debt from credit reports, as medical professionals may simply switch to cash-only transactions. I asked you if you were looking at how the healthcare industry would respond, and you assured me that you were. However, after reviewing the rules analysis, I did not see any stakeholder outreach to the healthcare provider community. That said, there is a section in the analysis on the costs to healthcare providers. My question's, how many physicians did the organization actually consult before issuing the proposal? And how many members of the healthcare industry or providers in general did you consult with? And was any of their input actually integrated into the rulemaking?
Yeah, just to be clear, this is a proposed rule, so it's not final, but I think we did do a lot of outreach in terms of understanding the different dynamics between hospitals, between independent providers, between other types of facilities, the integration with the health insurance system. So I remember your question last time. It is something I too have been really wanting to make sure we get right, because we don't want to see this be something that is abused, but we also want to understand all the potential effects.
I think it is critical that you follow and take into account what will happen to these folks that send out a bill and then they have to pay their bills as well. And I think that has to be taken into account in this
Oh,
situation.
absolutely. And as a general matter, we see that not all financial medical providers do this. There's a lot of differences, and there's some important differences when there's insurance companies involved.
Okay, and I know I'm out of time, but I have just one very quick, and I think you can answer this with a yes or a no, Mr. Chairman. Director Chopra, does a company have to abide by the Fair Credit Reporting Act, the Fair Housing Act, and the Equal Credit Opportunity Act, regardless of what technology they use, AI or otherwise?
Yeah, there is no AI exemption in any of those statutes.
They all are subject to existing regulation. Thank you.